let's just talk about inflation in general. How does inflation impact your business and the fact that inflation has declined quite considerably from that post-pandemic peak?
Yeah, so, when we have a lot of inflationary pressures, we're obviously pushing that through to our customers. And, I would say in the last 2 years, what we've seen is the battle with our customers is get product. There's a lot of shortages that were out there. And can you try to, hold off on your price increases? And, it's really been interesting lately. I came out of the Q1 board meetings with all 10 of our CEOs. And for the first time, I heard something that was much more like pre-2020, which was we are now fending off price reduction requests from our customers or figuring out how we now transition to going back to our suppliers using the strength of the dollar, the weakness in commodities to really push down on our costs coming through. So, we've had a lot of inflation over the last couple of years. It feels like somehow there's been a market change starting in 24 where we moved back into that disinflationary type feel that we had pre-2021.
All right, I want to go back to your Q1. According to your Q1 numbers, I thought this was fascinating. Your consumer sales are up double digits. Your industrial sales are down double digits. Give me a sense. What are your industrial customers telling you? Are they pushing back on prices?
Yeah, so two things really happened in the first quarter. The first thing that happened is a lot of our input prices in our industrial business that we pass through to our customers, and think of it almost as a toll. As those prices came off, of course, we were going to pass those through. Those are contractual in a lot of cases so that we can maintain our margin. So as commodity prices came down, units were staying much stronger than where our revenue was, and we were able to hold dollar margin per unit. That was in Q1. In Q2, what we've seen is a more aggressive, not only are you going to pass through the decreases on the commodity costs, but we're also expecting you to find productivity to give us price declines. And what I would say, Frank, is sort of really worried us. When I look at our industrial business, from orders coming in to sort of a run rate of where the business is, it took a sort of 5% downtick in run rate in Q2 over Q1 from what we're seeing. So
by the way, when you say Q2, you're talking about the current quarter.
The current
what you're seeing right now.
Yeah, so when we look at revenue production in the second quarter, we're seeing a downtick either based on new orders coming in, based on sales that we're generating. And gives us some pause that the economy is maybe slowing a little more than people think.
Let's talk about the consumer side of your business. Consumers under quite a bit of pressure. I'm looking at energy prices up 4% year over year, food even up 2% year over year, car insurance up 20% year over year. When you're talking to the CEOs of your portfolio companies in the consumer space, what are they hearing from their customers?
Yeah, so almost directly correlated to where your income level is. The lower income levels that are really struggling with these inflationary pressures on all basic necessities, right? Shelter costs, food, insurance. That customer for the last couple of years has been so pinched, and we're seeing revenues in those customer, kind of categories down pretty significantly.
On the consumer side.
On the consumer side. And that has been happening over sort of the last year and a half.
So you're also seeing that weakening consumer as well?
Not on the high end yet.
Okay.
So
but it's the middle and the lower end.
The middle and the lower end are really getting hit.
One last thing I want to talk to you about and hit really quick. Freight cost. Last year, the year before, we heard a lot of companies talking about elevated freight costs. I'm looking at trucking rates, flat year over year, down 20% from 2022 when they really hit all-time highs. What are you seeing with freight costs? Are you able to pass along some of the savings compared to 2022, at least, on freight to your customers? Or are you just enjoying some of those savings on your end?
Yeah, so freight costs are very stable right now, and they have come off a lot. Of course, we want to try to capture as much of it as we can, but this is part of that disinflationary trend that I'm mentioning. Our customers know that these costs are coming off. So as much as we want to protect them, they're coming after them. And so we are seeing those, costs be pushed through and, lower costs for our customers.